Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Chris Vermeulen from the TechnicalTraders.com. Welcome back to the show, Chris.
Thanks for having me, Jim.
Chris, the stock markets last year were setting record highs except for the NASDAQ. The different story this week. What's going on?
Yeah, well, we're seeing a little bit of fear creep into the market this week, which is perfectly normal. I mean, when you look at the S&P 500, it seems to be about every month, every 20 trading days or so, we see a little bit of a pullback in the index on the daily chart, and we either pull back to the 20-day moving average or the 50-day, and we're starting to see that. There hasn't been a lot of fear in the markets for the past almost a month already. And the VIX was low, and money really just kind of being confident, not piling into this market, but money just slowly keeps trickling in. And the market, really needs to get shaken up every now and then. And here we are a month later from the last market dip, and now we're starting to see the market shake things up. It's got to spook some traders out of their positions and create a wave of fear, and that's what puts in these market bottoms. So it's going to be interesting if the S&P 500 finds support here at the 20-day, or if it's going to go a little deeper to the 50-day before finding a support level. But overall, there's nothing wrong with a pullback in this market or a pause here, because we're really just need to let this kind of cycle low work itself out, and then we should be back probably to new highs after that.
Everybody says pullbacks or minor corrections are healthy for the market, and we really haven't had a big one this year, have we?
No, not really. They've all just been very minor, literally 3 or 4 day pullbacks, that's it, nothing significant, and then boom, back off to the races. So.
And when you say back to the races, what do you do until the races start again? Are there any particular plays people are making right now?
Well, we have been seeing over the last 4 or 5 trading days, money definitely getting a little nervous. We've been seeing big money kind of rotate into the defensive sectors. So right now, the stock market, it doesn't have a whole lot of upward momentum at this point. And money has been going into the defensive plays like bonds, like the TLT ETF. We've been seeing the utilities ETF on fire. The healthcare sector really had a nice pop and rally yesterday. I think the whole Delta virus potentially starting to creep into things. People thinking, the healthcare is going to continue to be a booming business. And so we definitely are seeing sectors like those defensive ones that no matter what happens, we need healthcare, we need consumer staples, we need the utilities. So those things have been moving up. And when they all move up together and outperform the stock market, it usually means a quick pullback is in line. Now, whether it's a 2 or 3% pullback or a 34% pullback like we saw last year, we don't know. So you just have to kind of step aside, let the market do what it's going to do, and then get back involved when it does kind of shake things out. So with that said, the stock market is still in a bull market. The trend is up, and really there is no point to be selling stocks right here. All we're doing is looking for some type of pause or pullback, and then for the market to go higher. But the market needs to get some strength because not all the sectors are performing very well. In fact, most of them are actually in a downtrend. So this market is moving up, but with very little power behind it.
Is it true there's only 2 or 3 major stocks holding the whole house of cards up?
Yeah, I mean, you can definitely see it. The S&P 500 is a pretty good gauge of that. You can see it just constantly pushing up to all-time highs. And it's got, some big tech, big blue chips money is moving into the market, but it's really just the blue chips. It's just the big, comfy stocks. Everyone knows if any investor wants to get involved, they buy the big brand names because it's really the only thing they know. And so that's what's holding this market up in a significant way. If you look at the small cap stocks, all the companies that most people don't know, that when the market's in a strong trend, the small cap sector, like the Russell 2000, should be performing very well. It has been trading sideways almost all year, and it's really just totally dormant and out of favor. And so that's a sign that people aren't flowing into the speculative small cap stocks. They're actually just going into the big, boring blue chips, which keep driving this market higher because they're heavily weighted in the indexes.
We'll have more with Chris Vermeulen right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Chris Vermeulen. Chris, what's going on with gold?
Well, gold and silver definitely have had quite a roller coaster ride over the past few months, this summer, really. We're seeing gold have a pretty nice rebound in the last 4 or 5 trading sessions off the lows that we saw last week when there was kind of a 6 a.m. kind of flash crash in the precious metals market. Gold has rallied its way back, but it's at a really critical resistance area, which is around the $1,800 mark, US dollar mark. And that is not only a whole number. Typically when price of a commodity gets to a whole number like 1,800 or 1,900, those type of round numbers act as resistance. And so gold is stuck under that. It tagged it and has pulled back. It's also a really critical line on the chart when you go way back to early this year. Either gold price is stuck above the 1,800 and bounces on it, or it was stuck below it, hitting its head on this 1,800 point level. And right now gold is below 1,800. It's hit its head on it. And the odds are it's going to act as a resistance area, and we could very easily see precious metals go back down. And I think we could see gold and silver test the lows that we actually saw last week, which is quite a ways down from where we were. And a lot of that's going to have to do with, I think, the U.S. dollar. The U.S. dollar is on the verge of a big breakout. It's having a big move up, as you and I are talking today, up over 0.5%. And if it does pop and break here, then metals are definitely, I think, going to fizzle out and lose some traction. Gold could lose $100 an ounce very quickly on that.
What's going on with crude?
Well, crude oil, I mean, it ran up and hit a nice measured move around that $77, $78 target that you and I had talked about many months ago. Since then, it has pulled back. It's been trading sideways. And it's actually testing a really critical support level around the $65, $66 per barrel mark. And this is on the continuous contract. That acted as a key target in a resistance area back in March. And then it traded sideways for several months. And then it broke out and ran to the second target at 77. And so now it's pulled back to that level again. And so oil still looks really strong. There actually is, as long as oil can hold 65, oil's next upside target is about $88 or $89 per barrel. So there's quite a bit of upside potential in crude if this market can get some legs and start a new rally to the upside.
Are there any safe havens, and if there are people going to them?
Yeah, I think the main safe haven is the bond market. We're seeing U.S. bonds really start to come back to life. They put in a major low early this year, and now they're kind of setting up what looks to be a fairly large pattern that has a lot of upside potential. Just based on what bonds have done so far, I think we could see bonds actually rally another 9 or 10% from where they are right now, which is a pretty significant move in bonds. That'll bring us kind of back up to right through the heart of where bonds were trading last year during COVID, where bonds spiked up, then they crashed, and then they traded kind of sideways through last year. That'll bring us back up into that kind of resistance area. So I think bonds are going to continue to hold up very well. I think when the stock market does have some type of bigger correction, whether it's starting now or it's in several months from now, I think bonds are definitely, in a new uptrend, and there's a very quick, 9-10% upside potential, and they could go even higher than that. That's just where this current chart pattern is pointing to. And once one chart pattern completes, then you wait for the next one to unfold, you can re-gauge on where the momentum should take it next. So you just kind of got to take, I'm a technical trader, so I take every trade or asset one bar at a time, one chart pattern at a time. I don't ever over project and, call for ridiculous pricing of commodities too often, but you just kind of got to let the market do what it's going to do.
Yeah, well, take a look at lumber. Look at how lumber prices skyrocketed at the beginning of the year. Now they're almost back to where they were last year. How do you take factors like that into account when you're projecting trades?
Yeah, well, we saw, when something goes parabolic, if you look at like the lumber chart, especially like on a monthly chart, you can see how it, for a decade, more than a decade, it just kind of traded in a somewhat normal trading range and working itself up in price. But then suddenly last year we see these big green bars, and lumber went from roughly like $260 all the way up to $1,700 in change. So just an absolute massive parabolic kind of bubble. And usually what goes straight up comes straight back down. And here we are back at 455. It's pretty much back into where it should find support. It might still go down into the 300 mark. But you just have to be aware that these bubbles are very dangerous. When something goes straight up and it reverses, you don't want to be holding something that, especially lumber, that had a very clear reversal candle to the downside, and it's been selling off. These are chart patterns that are kind of like a signature pattern to, if you're going to trade them, you have to be very aggressive, small amounts of money because they move very high percentages. But it's a pretty reliable pattern. A parabolic spike, once it loses that momentum, just fizzles out and will be out of favor for a long time.
Massive wildfires in BC and California, two major sources of lumber. Does that factor into the futures price, or is that something that takes a long time to work into the equation?
I think it works itself into the equation. The thing is, there's just so much downward momentum from this lumber bubble popping that even if there is that type of bullish news for lumber, where they can't run the lumber mills, they can't go out and get lumber. There's just so much selling going on in lumber commodities right now that it really isn't slowing it down too much. I think there's going to be high inflation. We're going to continue to see prices creep up for another year or plus. It's kind of scary. You look at the China production numbers, everything seems to be kind of slowing even more, and they produce so much for so many countries. If they can't produce it, then demand goes up. People need it, and there's the lack of supply, and that's the big problem, is people just can't get stuff. Everything's just jacked up in price, and that's here to stay for a while. It's probably going to take a year or two at least to fizzle out, depending how Delta Wave goes through. This could go out for another 2 or 3 years easily of these elevated prices that really just makes everything so expensive to buy and do and all that stuff.
What's going on with Bitcoin?
Well, Bitcoin broke out of its, it was in trying to figure out whether it was going to have another leg down or if it was going to put in a bottom and break out. And it ended up breaking out a couple of weeks ago. Bitcoin, once it broke through this kind of $42 or 42,000 mark, it's really kind of broken to a new level where we could see it go all the way up to around 52 is kind of the next upside target. Right now it's at 46,000. So it still has some more room to go, but overall, when you look at Bitcoin in the type of chart pattern that it has, especially if you look at the monthly chart, it is just like lumber in terms of a huge parabolic bubble, and then it fizzled out. It lost half of its gains, and now it's having a big bounce. And the big question is, if this is like how it's played out many times in the past, we could still actually see Bitcoin still sell off, eventually roll over, and drop to a much lower price, around 22,000, maybe 16,000. But this pattern could set up to be another major bull flag, meaning the low was put in a couple of months ago, and now it's really going to oscillate kind of between 60,000 and the lows around 30,000, and build this great big sideways flag. And that is could be a huge pattern that points to dramatically higher prices going forward. For example, this chart pattern, if we saw the low a couple of months ago, the next major upside target for an investor, somebody who wants to buy and hold Bitcoin, brings us up to about $90,000 per Bitcoin. So lots of upside potential. But if it definitely breaks that 30,000 to the downside, I mean, it's going to lose another it's going to have a dramatic drop. It'll probably be 22,000, somewhere in there, 16,000. So it'll cut itself in half again from that level. But right now, it is back into an uptrend. It is kind of going to be stuck in a big, huge range. But when it breaks out of that range and breaks those all-time highs, the next stop is going to be 90,000, and it'll be pretty exciting if it gets up there.
Chris, so how would you sum up what's happening right now?
Well, to sum things up, we're seeing a lot of money kind of just work itself into the defensive sectors. Investors are getting a little nervous this week. We saw the VIX spike about 20%, and bonds are up. Utilities, consumer staples, healthcare. So we're seeing a little bit of fear in this market. And when there's fear in the market, it's generally going to be a good time to buy. It really has been kind of a buy the dip mentality in the stock market. And really this market, we just have to let it do its thing. It is in an uptrend. You have to let it continue to go. You don't want to be trying to pick a top, because it's a terrible way to try and play this market. You really just stay long, and we just need to see if this market can get some traction. We're going to see traction when the Russell 2000 comes back to life, when the transportation index comes back to life, which it's starting to show signs that it could start a new rally here. When the small caps and transports start a new uptrend, start breaking out, that is a really good sign, because typically transportation stocks are going to start to lead the market. They're going to lead the equities because they can see orders coming, they can see demand. And small cap means that investors and traders are actually willing to take risk. They're expecting higher prices. And that means they're not only invested long-term in the market, so they're not planning to sell their long-term holdings, but now they're throwing on extra fuel into the market to try and make money for a rally. So those are two kind of indexes I like to watch to get a feel on the market here.
Chris, thank you so much for chatting with us.
Yeah, thanks for having me, Jim. Always a pleasure.
My guest has been Chris Vermeulen from thetechnicaltraders.com. If you have any questions for Chris, you can send them to info@howstreet.com. Find us on Twitter @HowStreet. Our YouTube channel is Talk Digital Network. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.